Hey everybody, and welcome back to the AstroFX YouTube channel. This is the first video of 2018, so I want to start off by wishing all of you guys a happy new year and a successful next year, both in and away from the markets. So this video today's date 7th of January 2018, is actually a catch-up video of GBP USD. So what I mean by catch-up is 7 weeks ago, I posted the comeback of GBP USD and actually did very well on YouTube. This video had over 10,000 views in a short 7 weeks, and some of the comments I want to just quickly show was a lot of appreciation and love for my analysis and my predictions. So thank you very much for all the comments and likes and views that you guys do give on the channel. And if I just go, basically this video was a nice little timeline ever since the Brexit of the different consolidation periods and trading zones that we have encountered over the past year or so. If I just go to roughly the 9.5 minute mark, one of the things I want to mention is that at this particular moment I made this video, we were trading between the 1.3100 mark and the 1.3300 mark. So that 200 pip range is where we were trading between. And if I just fast forward and go to the 4:50 mark, I'm just going to play this video for you guys and you can hear my future predictions that I have made for both the medium and long term. Let's listen.
2.3. Once we go ahead, we manage to crack above 1.33, we would then be revisiting 1.36, taking out that high. Now, I do believe that.
And let's go ahead and check out what actually happened on a live chart. So a 350 pip plus move from that level all the way to hit our target of 1.3600 to the T. Congratulations to everybody that followed the analysis or had similar analysis to what I did. So thank you very much, and I hope you guys did manage to get some sort of profits and bank some sort of pips from this move. So let's talk about where this move came from and where we are right now and possibly what's going to happen in the short term and long term future. So at that moment, we can see the moving averages were crossed and we did actually appreciate in price to first of all break past the 1.3300 barrier. This was a very, very important barrier. As you can see, we did have numerous attempts in which this price had a hard time breaking, but ever since we did, and ever since from this moment all the way till now, we've actually been seeing a lot of weakness from the US dollar. So that actually did help this period right here. I think we had some worse than expected US durable goods data, and we also had very, very dovish comments from FOMC meetings. That pushed GBP USD all the way to the 1.3500 mark. Now, I knew that this was going to actually bring on some sort of pullback, and if you guys do follow me on the Everything FX daily page where I post GBP USD along with all the other traders, go ahead and check that out. So GBP USD, I post on here for free, and if you guys want further analysis, check out the member zones on the technical floor. But I did predict on there that 1.3500, we have to expect some sort of pullback. Now, from the last video, hopefully you guys take on some of the advice that I give, but I always said that the history does have a tendency to repeat itself in the FX market. So 1.3500, if we actually go back to September, we can see was a particular problem for this price. But however, if I just do one better and continue to go back in price, I'm just going to keep on going back to the point of around about the Brexit levels. So just after the Brexit happened and during that period, we could see 1.3500 was actually a major barrier for this pair. And as you can see right there, it was almost the first stumbling block for that Brexit move. So 1.3500 continuing to have very, very important and significance right now in price. So since then, since expecting that kind of pullback, I actually did say to people that hopefully we can short this pair. We did have a number of different candlestick confluences, that we actually did expect for this thing to then short. My target for that was the 1.3300 mark. However, what happened since then was I noticed that the price had a particular hard time breaking the 1.33700 mark. So you can see that little grey line right there. Now, a lot of institutions had this price at the 1.3400 mark, which I don't disagree with. However, I have my own way of analyzing and I stick to my own levels. So the 1.33700 level. So once I did short this, we can see that it pulled back a little bit, but I was very safe due to my stop loss. It pulled back down, and then I end up actually getting up before my target. However, that target went and did get completed at the 1.3300 level. Since then, you can see on my charts that I actually have what I call a symmetrical triangle formation. Now, what a symmetrical triangle formation is when the market's making higher highs and higher lows, but also making lower highs and lower lows. So it's basically showing a little bit of uncertainty and almost a sideways zone and period, and then we can obviously draw this triangle on right here. And then what actually happened, if we go back to this date right here, and I want you guys to remember this date in the back of your minds, and I'll show you why in a minute, but we're talking around the 27th to the 28th of December. That's when the market actually then, as you can see, had a massive bullish run all the way up to recent highs of 1.36. So that's when it actually got caused. So, well, technically, we can also see that 1.33700, which I just stated a minute ago, we managed to stay above, and also you can see the nice little breakout that we had just there. But however, one thing I'm going to do is I'm going to go to the dollar index for a second. So we're going to the dollar index, which you can see here. Now, for the last year or so, the dollar index has been taking quite a significant beating. If we go to the daily time frame, which is here, you can definitely see the past year or so taking a good pummeling. So basically December last year was around this period where we're trading at 102, and now we're trading at crucial levels at 91. So where I've actually drew on that little green mark right there was at that exact moment on the 27th and the 20th of December, where you can see we almost bounced off that blue moving average and then we slammed down, and now we're at crucial levels. So at the same time GBP USD slingshot at the upside, a big cause of that was obviously the dollar index showing massive weakness. So one thing I'm actually going to do, I'm actually going to stay on here for a second. Let me just zoom out and let me show you what kind of critical levels that we were actually on. So let me probably helpful on the weekly. So on the weekly right now, wow, if you can see that right there, we're trading at the 92 mark. Now, a break below this will go all the way back to lows that we had back in 2015 and 2014. So this thing falls any lower, and can you imagine what will happen to GBP USD? So GBP USD, where are we trading right now? Let's go back to this pair. So hopefully that little dollar index shows you a nice little push and pull that's happening between this and that symbol right there. Where are we trading right now? So ever since we actually have continued to appreciate in price and we've broke above the 1.3500 mark, then we hit the 1.36 mark. Now once hitting this price, if I just zoom back a little bit again, well, what happened back in September was that we actually found that there was some sort of resistance, possibly on like a daily perspective up here, and we actually made highs of 1.361, but then we slammed back down. So all it was a little slight pullback that I expected, that I did manage to take advantage of very well. And on this 4-hour time frame, you can see it was a nice little bearish engulfing candlestick up here as well, which then helped us come back down to 1.35. So a nice little 100 so pips that we managed to catch there. And again, free analysis that I shared on Everything FX and the members. And since then, we're actually now trading in between this zone. Very interesting to see what's going to happen next. Now that I've shared that dollar index, what I do believe is happening right now is almost a battle between the Brexit talks that have basically started to look quite positive against the dollar index trading at crucial levels. And non-farm payroll didn't really make much of a difference. So if we manage to continue to appreciate in prices, you can see nice little higher highs and higher lows. I do believe that one of the barriers that we need to look to break is this 1.36500 mark, just roughly there where this thing, as you can see, had a massive whip through. So that little wick right there, once it breaks past that price, let me just go ahead and go to the daily time frame. If I go to the daily time frame, the next level that we can then look at is the 1.37500 mark. And that's my medium target for GBP USD. Once we break above, of course, the level I've just mentioned. After that, wow, I'm going to really go ahead and make a bold move and go 1.400. 1.4 mark GBP USD would actually show a massive comeback for GBP USD. This will be a significant target, and I'm just going to go ahead and make that prediction. I'm going to say it's very, very long term for now. It could happen sooner than I expect. However, that's my angle for GBP USD. So right now I'm looking forward to seeing how this next week or so plays out. If I go to the weekly time frame, as you can see, it's looking like it's extremely bullish, and I've actually, as you can see, pointed out those highs right there. So that's my analysis on GBP USD. Hopefully that has brought you guys up to date on what's been happening recently and given you guys a nice little future prediction for this pair. I will try and do more technical videos on this, and I believe Sean's going to do USD CAD and Euro USD, which has also gone very well. And these were videos that we posted on the AstroFX YouTube channel for free. So thank you very much for joining me. Let's see what happens in GBP USD in 2018. Nice, exciting stuff.